Good evening. This is Michael Filigera with Logical Signals and with the Elliott wave update for the NASDAQ 100 future for Thursday, March 4th, 2021. Today did unfold pretty much as expected, but there was a slight twist on the way. And I'm going to start at that point. Just to recap real quickly, I am still satisfied with primary wave 1 being completed there, primary wave 2 being completed here, and we are unfolding in a primary level third wave, which within the first intermediate wave down, which is going to be comprised of 5 waves, looks to be in its finishing stages and may be labeled complete here, but I'm going to need a little bit more evidence, and we'll find that a little bit cleaner once I start to drill down past the hourly chart. For right now, I'm leaving it open, but we are then looking for an endpoint and to label it a minor wave 5, and then to put a intermediate wave 1 in that place, which then leads us to an additional wave 2 correction. And more on that in just a moment. But I wanted to go over today, and I'm going to bring this down immediately to the 15-minute chart, which kind of makes it pretty clear. And that was right in there. Here we were counting the fourth wave, and that's pretty much where we left off yesterday evening with the update, leaving the possibility that we could go up, and we had put out some Fibonacci, that it could go up to particular levels, finish the move, and then start the decline again. Well, when we first came in this morning, here we were, right in here. That's 6 a.m. Pacific Coast, by the way. And so the market opens, and they immediately buy it. And I thought, okay. So my original thought, and I even shared it with a trading friend, that I thought it would be a classic pump and dump. And they pumped it up, and they ran it all the way up to 2765-ish. Yeah. So yeah, 12,765. And then they began to sell it. And they sold it all the way down to new lows, just barely below, because where 5 ended was 12,511. And we got down to 12,508, almost 509, we'll call it. And then the market turned and again rallied all the way back and went to an additional new high, all the way up at 12,792, 93. That was, in my estimation, following Elliott wave, I was very surprised. I was caught off guard. I thought, okay, it's going to bounce. I had put very short-term Fibonacci levels on there, and really felt that it could get as high as the 0.618 retracement up. And at that level, I began to short the index. Well, it just continued to fly. And it just continued to go. And it caught me so off guard that, and the reason I'm telling you this is because these are very important moments where your feeling is like, what the heck is going on? And I needed to get out of the trade, which I did do, by the way. I did close the trade, took a loss, but I closed the trade and then took a step back to realize it was like, oh, that was just wave A and here is B, and now it's flipping up to finish C. And by then stepping back out to see that and then stepping back in, because look what they did, and we're not talking like days in between. This all raced up here, got there at 11:30 Eastern, and at 11:45 Eastern, this thing had drifted and started to decline pretty strongly. And in fact, it had fallen from 797 down to, let me show, 674. So it already dropped 120 points, 120 bucks. And then just proceeded to drop all the way down. Now it took a couple hours, but all the way down to new lows at 12,306. Now, here's kind of the moral, or kind of the example being set here, is that the market could throw you for a loop and how it traces out a previous wave. We already discussed that corrective waves can be deceptive. B waves can be very deceptive. And that they make you think that, okay, it's over. That's exactly what this did. It was nothing but a B. And then look at his split, the C wave followed, and it smashed you in the jaw as it went on through. And by the time you were like, oh my God, what is, it's, oh, we've gotten bullish. Why are we getting bullish? Nothing made sense. Then all of a sudden, everything started to turn. The Dow turned, the S&P turned, the NASDAQ, the Russell, everything started to turn. And there was no looking back. So if you can't step out to that point of confusion, throw, which I did, I stepped out and I put the 3 and the 4, and then I started to trade again and made all the money back that I had lost. That's the point. You have to get your focus back. You've got to stand back out of the chaos. Take a look to see what's going on. Don't worry about the P&L. Don't worry about the numbers. Look at the pattern. And the pattern's going to fit. You can throw Fibonacci's up there. You can give yourself confirmations, but you got to get ready, because here we go. And the market told you it was going to go down. It started to break below these moving averages like they didn't exist. So it was back on again. And it was an extremely profitable decline, whether you traded the mini or whether you traded the micro contract. It was a very profitable decline. And it's a decline that we were fully expecting. If you remember, we said 3, 4, 5 to finish the intermediate wave 1, like I just said. But I'm leaving it open because here we are sitting right there. And this looks kind of 3-ish to me. We might come down. And so the fifth wave is maybe subdividing, and this is only 1, 2, 3. That's a 4 again, and we're going to have a little bit of a new low. Maybe not all that much, because remember, when I throw the fibs back on there, you're going to see that we do have support underneath. We have it down along 12,100 and then 12,085. So there's about a 100-point window, not too far below where we are. In fact, it doesn't have to go all the way down there. We just need likely another new low. And so we're just going to leave it open for right now. But we must get into the habit of trading what's in front of us. We must also get in the habit of that when you're thrown a curveball, like right there, not to get it so far out of whack that you drop out of sync with the market, that you fail to recognize the turns, et cetera, et cetera. There are a lot of things that kind of can happen and go on. You need to just take a step back, stop trading, take a step back, take a look, see what's going on. And normally once you regain the control of where market direction is likely headed, or does it change your preferred count that you're using right now? And you can then pick that up. It didn't change it. It just stuck the 4 from there and put it on there. And it totally fit, and the pattern was clean. In terms of, yes, it was confusing, but it was still a clean pattern. So get back to doing what you know what to do, and that's to trade, and that's to trade the move, and the move was down and you made your money back. So regardless if this move was going to be up or whether going to be down, you needed to be ready to do it, because this was a profitable run. Failure to recognize it is not the worst thing in the world. Fail to step back and to see it, and to see if there was a possibility, because again, I did end up coming back in and trading that on the way up. Stuck the 4 once it started to come down, but I did. I got myself back together. And this is the important part, so that you can continue to trade, because the market's not going to stop. So if you're going to stop, A, you might have to accept the loss and live with it, or you have the option of getting back in. And let me say that the loss that I ended up taking just actually wiped out what I had made thus far in the morning. I mean, it wasn't down a great deal. I just basically, it would cost me to to make the money because you got to pay commission. So it cost me to lose the money because I still have to pay that commission. And that's what ended up being the loss, is a commission. Easy to make back. But I would not have been able to do it if I couldn't just pull out, get my focus back and decide where we were in the whole scheme of things. But because I had been working it and I continued to leave my chart labeled, I know what points are going to start to pop in to break this from being a 4. And we were a long way from that. We were very far from that. And so I continued to embrace Fibonacci's that I'd run from the top of 2 down to the bottom of this 5. Actually, I ran, excuse me, from this 2 down to this 5, so I could get Fibonacci's on what were the limitations or the expectations for a 4th wave correction, an ABC correction. And that's what threw us the curveball, is the actual form it took. Okay, back to today, because that took a little while, but you know, these things are important to kind of pass along. Because they continue to happen, and the markets are again controlled algorithmically. I couldn't tell you why somebody moved in. Could have been somebody being closed out of a position. Could have been somebody, oops, I forgot to do it here. Whatever the situation was, that's when they moved in, and they moved in with some pretty big size to push the market higher. I continue to follow this decline. We believe that, or I believe that it is getting very close to putting in an intermediate wave 1 bottom. That's going to set the stage for a wave 2, an intermediate wave 2 rally. Again, it's going to be an ABC, but it's going to be covering from here to wherever this drops off. And I'm just going to throw some Fibonacci's on here. Let's go up here, and we can draw it there. We'll go to here, bring that up to here, and see where limitations down are. Okay, that's what we're working with. And if you remember, we had right in here. So this particular wave would equal this first wave down here at 12,080.25. So totally within the realm of reality, and we've broken below 1, 2, 3, 4 times. We've broken below 786. So if this next level up, like 12,448, 12,050, 450. If that continues to hold, it would not be a surprise to see this kind of come down at least into here. And that other zone, by the way, is 12,185, and then down to 12,080. For it to dip into there, we get our wave 1 complete, and then we're going to set Fibonacci. This is on an extension, but that extension can also be used coming back up. But I'm going to at least get rid of that. And now I just want to apply some Fibonacci. And again, we're going to come here, because this is the starting point for this first wave down. So I'm going to go 328, 20. Yep. No, that didn't. Did it? Yes, it did. I'm going to come down here. That's 06, but this actually is 04. 0450. All right. I didn't want that one. Sorry about that, folks. We want just Fibonacci's. Let's try that again. 328, 25. Yep. And down to here, which is the lower point. The lowest point we have. So let's just say if that doesn't go below that level, we'll give it a little bit. Dip below 12,300. If we bottom in this area we're looking for these areas for a rally back in 3 waves. So you can see that it could be very intense. Now again, being a wave 2, it cannot exceed 13,328. That's the high of where wave 1 began. If we're going to put a wave 1 down here, it cannot exceed its starting point in a wave 2. That's a rule. So, but it would not be totally uncommon. So how do we want to leave this for tomorrow? If we really start to sink and we get below here and we start falling below the other levels, levels that I gave, which is 12,190, let's say, down to 12,080, then this market is in serious trouble. We must trade what's in front of us. If it is hammering itself down, please don't fight it. You gotta go with it. That's how you're gonna make your money. But when it reaches support levels, and again, you're gonna run Fibonacci's to give yourself the clues as to where the possibilities lie. And we did. We ran fibs from the all-time high, sort of. Come on, give me that all-time high. Come on, it's right in there. Oh, God. There it is. And we're just going to run. Actually, I can't. Sorry about that. I'm going to go over here and do this. And do this because I want to do it correctly. Sorry. I'm running the Fibonacci. Come on. There. And you can see a lot of these kind of come together here. But where they kind of give us here, there's one, and here is 100% of that. So we still, you know, we've got that dip below 12,998, but it has a zone down into here, and that's where it can start to come in. But that's where it wants to drop. We have serious upside if that's where it wants to go. But I don't believe that it will. I think we remain in finishing our wave structures. Let me get rid of that one. That's going to keep this one. This bottom may change, but that gives us some ideas. Run your own fibs, set them up so that you have what you need, and put it in that point wherever this bottoms out. Right now we're using the low thus far. And now you can start to put limitations. Then you've got your working moving averages on an hourly, and then you can come down here and you have them on a hourly basis, a 5-minute basis, a 2-minute basis. I can change this, put it into a 15-minute chart. It gives me a little bit more to work with in terms of now I can see more clearly what's going on and what my patterns are doing. Well, they're rallying it back up, so they did end up doing that. So it looks like it might, on a 15-minute basis, be going up here. It still can and still come down. If not, it is kind of turning into a 5 here. So we may have that as the low, folks, right there. In which case, we have limitations on where it's going to come. And we know we have a 15-minute. If it starts to break here, it is really kind of broken above all of them, except now it's just working on the 100, and then you got the 200 up here. That's a 5-minute chart. The 2-minute chart's already busted back above. Doesn't mean it can't fall back below it, but see how these are all now beginning to point up on the 2-minute? They start here, they're starting to point up. Here, they're just beginning to turn. If indeed we're going to start a rally, that's what they'll be telling you, and they'll point in the direction that the market's basically going to go or continue to go. Because if this now comes down and holds this 4, holds this 8 on a 5-minute level, rally will continue. If this goes up and reaches the 50, I would assume a reaction to sell is going to happen. If it breaks above, then I'm going to be looking for it to get up to this 0.236 level. That would be more confirmation that the corrective phase, the corrective bounce has begun. And it's going to be an ABC type of a bounce. But again, we all know that there can be many, many different versions of it. I have to leave it there because we can't make these too long. Keep an eye on what's happening. Keep an eye on your breakers in terms of your circuit breakers, where you want to get long, where you want to get short. Always work with a stop. If the market throws you a curveball, as it did here, you want to be prepared because you certainly can't miss that. You're going to make back what you gave. But if you miss that, you're sunk. Don't let it rattle you. Get back in the saddle, so to speak, or get back up on the surfboard and ride the wave. We should have another good day. The volatility is here. Trade what's in front of you. Put your skills to use and trust them. That's it for tonight. I wish everybody a very good evening, a great trading day tomorrow. Next update will be March 5th.